Welcome to TradeTheMBI.com. This is John. This report is for the 16th. Not much of a shock. Clearly some early wind of the potential move for a softened number in quotes there, as we kind of expected they were going to try and engineer, because there was no other way to get a justification for rates lower. There still isn't, because clearly we can see that the adjustments for CPI were softer than expected. How convenient, and right on time, so that they'll be able to cut rates right before the election. And yeah, I still don't think it's going to be too late for that. They needed to have had this happen a quarter or so ago, but things just weren't cooperating and they weren't able to make the adjustments to the numbers. Then they finally got it, and of course that was a huge boon to the market. And consistent with the readings, MBI magenta well above the MBI yellow here, and shorts under that key 10, but particularly from a daily standpoint, anything below 6, and you're looking at continuation for the upside. And all you do is look at the chart, and you can see that that's pretty clear. No question about it. When the MBI white gets to that level, it's always a big push, and pushing to new highs for the NASDAQ as well. So everything is peachy keen, hunky-dory, and wonderful. And now you have even fewer places to put your money because Treasury yields declining massively. And in that case, where are you going to put your money? You're either going to put it in commodities or you're going to put it in the market. And so that begs the question, well, oil was trading off, but it jumped significantly on that report. Not that there was a draw or anything, but just because you're going to fight the inflation. As a huge bonus to the euro, because it says that the US is going to soften relative to where the eurozone is, which for them is a key way to keep things rolling along. And when we look at gold, obviously it jumped on that news, and that's simply because there's going to be more debasement and it's going to be significant, and you can look for gold to get towards its new highs and break out into further ones. That also favored cryptos, because again, you've only got a couple of options for where to put money, and it certainly isn't going to be into treasuries, which means though that the Fed is going to be increasing their balance sheet, because they're going to be having to buy treasuries, because what's the incentive for anyone else to buy one? Absolutely zero. And I think that we've seen that liquidation, China moving their resources into buying commodities and everything else, and steering away from U.S. treasuries. And so, basically the Fed is going to become the largest holder of treasuries. It's already got a quarter of them. So why not just keep going? And this is what, governments with the Federal Reserve type banking setup can do. ETH still slower than Bitcoin, but needless to say, made the same move. From a 5K standpoint, pretty clean. No objections to it. I mean, we could see where this was headed early on, not just yesterday, but even from the day before. So obviously there was some early leak of the information, and people started positioning early enough from that point. So all in all, right on target with pushing towards more and more highs. You can see how it worked out as soon as the report came out. Obviously they did the spike after that from their accumulation, and it was nothing but north from that point. There's still a few little trade-offs, but minor, relatively speaking. And you can see that in post-market, this is continuing, albeit slightly. There's a little bit of up and down, not a whole lot. So that's the general course of things. I don't think any of it's all that shocking or surprising. This is what we expected from an election year. We expected it a lot sooner, so they're kind of behind the curve from that standpoint. Is it going to help much? Doubtful. At the end of the day, though, they can't afford rates to go too high because they got to finance this debt. It's getting unsustainable, and at that point, it's just a debasement issue. It's like, how far can they send it lower, and can the consumer absorb that? And at this particular stage, it's starting to show that the consumer's kind of getting tapped out. So we'll see how that plays out, because at the end of the day, that's going to affect earnings and also economic activity. So there you have it. And then what do you do from there? How much more can you spend? You're already spending $1 trillion every 100 days, and you're not getting much economic output out of it, which means you're really spending it ineffectively, and that ineffectiveness just exacerbates itself to the point where you get into a cycle and you get stagflation, hyperinflation. That's just where things are headed. So Be aware of it. As always, though, anything relevant, I'll put on the Skype chat. Have a good one. Trade well.